everybody, I'm Amy Atkins.
And I'm Mike Meena.
Welcome to the American Dream Connection, where we talk about everything having to do with owning a home, whether you currently own a home or whether you just dream of owning a home.
I dream of owning a home.
We all do.
Yes.
Still the best investment out there. So today we kind of want to talk about what it is in lending. Who are the lenders? Who are the mortgage bankers versus the mortgage brokers? Mike, you've been at this a long time. How long have you been doing loans?
28 years, 29 years. We opened Augusta in 1995, October 1st, 1995. So yeah, I've been around for a couple days. I worked for 3 or 4 other companies prior to that. So mortgage brokers for the most part. But you were asking what's the difference between a mortgage broker and a mortgage banker?
That is one of the questions I get is people say, well, are you a banker? Are you a broker? And a lot of people don't know what that means. Explain that.
So, a broker has a negative connotation, like you're going from here to there and you're charging a fee on top of that. And what it is we are not a broker, we're a mortgage banker where we underwrite a file here, we get it approved, we fund the loan, we close the loan, and then we sell the loan in the secondary market after the fact. A mortgage broker goes ahead, they submit a file to another bank, and then they do all the steps that we do, and then they sell the loan. Where a big bank, a Wells Fargo or something like that, might open up a special bank account for you that you don't know about, first of all, and then they might do a loan, and then it might go to underwriting over in Pasadena or Texas or somewhere like that. They underwrite the file, they approve the file, and then they will get you the information back. So that's how they do it, and it's the same thing. Wells may hold that loan, they may sell it off to another bank, a Chase or a Flagstar Bank or something like that, or they may keep it forever, so you just don't know. So as a broker, we're getting wholesale rates from another lender and we're brokering those files, but 90%-ish of the loans that we do here are done here. They're banked and then they're funded and sold.
So where are our underwriters?
Right there.
We could knock on the wall pretty much.
Well, actually, we have to go through Andrew, the accountant, first.
Yeah.
But they're one more door over.
They're one door over.
Yeah,
so.
Exactly.
What does that mean to you?
Well,
why is that an advantage?
I can run down the hall and I could hit them with the hammer that we're allowed to hit them with. It's a very soft, spongy hammer.
But they are local. They are familiar with the areas that they work in. Obviously we service all over Southern California, and it does make a difference to have someone working on a file that actually lives here and knows the market versus somebody that can be back in New Jersey. Nothing wrong with New Jersey, by the way, but
yeah.
So
that's where Springsteen was from.
Yeah, that's where Springsteen was from.
Yeah.
So, and not everybody that calls themselves a mortgage professional has all that much experience, and nothing against baristas. I think they're great. I love them. But I met somebody at a party who says, oh, I just got into loans and I'm going to be doing loans now. And I said, great, what did you do before that? And he says, well, I was a barista. I was making coffee. Well, that's great, but that doesn't give you all that experience you need. Don't you think the market is different today where they would need someone that has a lot of experience?
God. It's incredible to me the lack of knowledge that certain people have, whether it's about a 1031 exchange or how to use the tax returns or a first-time buyer tax credit or how to calculate income on a person who has investment properties, down to what portion of the W-2, portion of the W-2 do we use for income. I had one the other day with Chase. I can't say Chase, can I?
You just did, but like.
Okay, some bozo at Chase. He couldn't get the loan approved, so it comes back to me, and I'm like, where's the problem? I don't see the problem here. I don't know what numbers he was using, but this is what happens. So what we try to do is we try to understand that. Well, that guy has been in the business for umpteen years, but he was a wholesale rep. Then he was a title rep. Then he was this rep, and now he's hanging his hat for $3,000 a month or whatever he makes as a loan officer, and then he makes commissions on top of that, and if I can ever close something, it's great. Well, unless it's in that box and it fits in that cookie cutter, he ain't closing nothing.
Right. And not everybody gets a W-2 and has the same income throughout the year and everything's clean and easy. It gets complicated when people own businesses, when people own multiple rental properties. I mean, it's not all cut and dry. It's not for the novice. We'll just tell you that. It's not for the novice.
And it's also adding in overtime. Adding in, they just switched jobs last year. They have a new job this year. They were salaried last year, and now they're commissioned, and they're working 38 hours, not 40. And you've got to make it to where it's a saleable loan to Fannie Mae or an understandable loan. You go to a regular bank, you go to a Wells or a Bank of America or something like that, and if they're selling their own portfolio product, their debt ratios are about 17% less than ours, meaning that we can go to a 50% debt ratio and they go to about a 41 or 42% debt ratio, depending on what product they're at. And so that means that my client can qualify for 17% more than they can with Bank of America.
Okay, so for someone that's watching that really has never gotten a loan, they might be thinking of buying, explain what a debt ratio is.
Oh, debts. So you have a certain amount of debts, and those can be up to 50% of your gross income. Now, it's not necessarily the right thing to do to go to 50% of your income, but a lot of people are hiding some income here and there, and so those are the people that generally go up to that 45, 50% debt ratio. Well, Bank of America and Wells Fargo, they're like, ooh, no, hold us down here. We need it to be here, where we can go up above that, and even on FHA deals, we'll go even higher than 56%, many times in VAs, 60% plus. So, those are the kinds of things that we look at, and the banks have the bank option. We have much around that. And, we'll get a client, we're taking care of a client right now, and credit's an absolute train wreck. And all she needs to do is get $70,000 or $80,000 worth of bills paid off. We're helping her get those bills paid off, getting her credit score up, and then going to refinance her house. That's never going to happen at Bank of America. She would lose her house at a big bank. So, it's kind of the difference of what we do, and then the cookie cutter deals, we're going to have the best rates.
Yeah.
Those are easy.
Yeah. So again, it's so important to get in front of somebody that really knows how to untangle these webs that are out there, because yes, there are some loans that might be simple, but they're far and few between these days. It's gotten much more complicated as more programs have come out too that not everybody has. So get with a professional and make sure that you've got the real deal and the right information. Also, Mike has a blog on Facebook that he posts out twice a week, and it's got all this great information on it. You do it typically every Tuesday and Thursday. So on Facebook, make sure you follow Mike Meena on his page, and you'll get to also see kind of what current interest rates are, plus usually some scenarios. And I know this week I even learned a new word because you've got millennial children at home, and I always thought that a goat was something completely different. But
no, it's
now
the greatest of all time.
I know now I actually aspire to be goat.
Yeah.
I think we both do, because that means that you're really cool and that
Yeah.
you're the best at what you do.
What else? There was other words like lit. And
Yes, lit.
Yes, it's not like lighting a candle anymore.
No, it's like that you're super excited, and so we just want to be a couple of lit
We are
goats.
millennials.
Yeah,
Yes.
a couple of lit goats over here. So
Yeah.
follow us on Facebook. It's on Mike Meena. Just go to his Facebook page. Also, if you like what you see, give us a like, give us a share, and comment on our Facebook page, The American Dream Connection. We're also on YouTube. We would love you to share us. And you know what? We'll see you next time on The American Dream Connection.
Thanks, guys.
Thanks. Bye.